Hi, Amy. How are you doing?
Hi, I'm good, Paulina. How are you doing?
Good, good. Thank you so much for joining me today. And so I'm just going to go ahead and get started here. So thank you so much for everybody for watching and giving us your time today. My name is Paulina Bohorquez. I own Elite Commercial Group and I affiliate with KW Commercial. Today we're speaking with Amy Hoke, who is with Fidelity Bank. We wanted to speak with Amy because a lot of our clients ask us questions about what's going on in the market right now with financing. There's a lot of tenant clients, commercial buyers, and commercial investors who are thinking of starting new businesses and adding to their business or maybe decreasing because their real estate needs have changed with everything that's going on. Many of these initiatives do take time, company capital, and financing from banks such as Fidelity Bank. So Amy, could you please introduce yourself and tell us a little bit about how you help business owners navigate their financial needs?
Yeah, absolutely. I'm Amy Hoke. I work for Fidelity Bank here in Morrisville, North Carolina. I've been in banking for close to 15 years. Been with the small community bank mindset for the last 2 years, a little over 2 years. And so, I specialize in the helping grow businesses, some startups, many established small and medium-sized businesses when it comes to any type of lending. It could be as small as starting up a line of credit for the business or as big as a commercial property purchase for either owner occupied, non-owner occupied, or investment needs. And so that's kind of how I fit into how Fidelity Bank uses me as a banker. But thank you so much, Paulina, for having me today. I'm really excited to kind of talk about how some businesses can really get started with this process and what that looks like. I know there's not a lot of resources out there to kind of show you what that could look like and what to anticipate when you sit down with a banker for the first time. So any information that I do provide to you is my own personal belief and opinion. This is no way associated with Fidelity Bank or any other entity like SBA. So this is all based on my experience. I would say, think of anything that I talk about today as in the eyes of a banker, with their experience over the last 15 years. So thank you.
Okay, awesome. Well, I really, really appreciate you being here. I know a lot of times when I first start speaking with clients, they're kind of hesitant to take the step to meet with a banker because they don't know what to ask and they don't know, they want more information so they can go and meet with people at the bank that, be a little bit more prepared for those meetings. So we can go ahead and get started with our questions. Where should I start if I was a business owner? When I am starting a business.
Yeah, absolutely. It's all about having partners in the industry to kind of help you grow and to know where to position yourself. Three really important individuals that I would say is your business attorney. So they can help decide what type of entity that you want to set up. Is it going to be just a sole proprietorship? Is it going to be a corporation? Is it going to be an LLC? And what that would look like. Also, very important is setting up a meeting with your CPA just to go ahead and get started with someone that you know, like, and trust, and that
Mhm.
will help you grow into your next ideas that you have with your business. It's very important for them to understand what you're looking for and vice versa, so they can position you to that next level. And then last but not least, of course, the banker. The banker kind of puts the pieces together
Mhm.
and making sure that you have the deposits in place, you have the loans that you need in place, and so that you have a good relationship with your banker. Um, so really it's just having those contacts, I think,
Mhm.
is the most important before you even get started.
Okay, awesome. What items or documents should be prepared prior to speaking with a lender?
So I would always say be prepared with your documents in order. So many times I've run into people that will come and speak with me that have an idea of what they want to do, but they are not organized and they don't have their information in order. Most banks want to see how you're going to pay back those loans and how you're going to be successful. So that could be, what's in place that's going to be successful for your business, and then what would happen if things don't succeed? What's your secondary source of income? What would that look like? So one thing to kind of think about the bank is never the investor in your business. We're always going to be a tool to get you to that next level. And that might be what a lot of business owners fail to realize is the difference between an investor and a banker. So having those expectations up front and knowing what documents to prepare is vitally important.
Okay, fantastic. And people can always call you maybe before setting up that initial appointment.
Yeah. So items to kind of prepare, what you would expect on a first meeting, I would say is have your tax returns prepared. The last 2 years are very important when doing any type of loan. Making sure you have all of your documents in order when it comes to like your EIN number and your Secretary of State information. If you have year-end financials, that's always great too. A lot of people don't realize how important that is, especially with us going into 2021. A lot of people don't have their 2020 tax returns filed. So having those profit and loss statements, balance sheets are vital as well in that relationship to build right off the bat.
Okay, great. And what should a business owner expect when talking to a lender the first time?
So the biggest thing I would say is realize that when you're talking to a lender that they're basically your cheerleader. So you want to go into kind of that first meeting with being able to explain why you need the loan. So explaining your loan request, what amount that looks like. Is this a term loan? Is this a line of credit? Knowing what you're going to be using these funds for. Understanding the history of the business. Maybe you're buying this business and you're needing a loan, understanding that background of that business. Maybe even the history of that certain industry is also important too. So just kind of the background of anything specific that you would say would influence a business in the future, whether it's something that's a growing industry or something that maybe is a declining industry and why you discovered these things. And then your own individual history of the business. I think this is probably one of the most important things that I think people fail to realize is if someone's buying, let's say, a doggy daycare and they have no experience as an owner of a doggy daycare, for an example, that would be much more difficult for us to get a loan done if there's no experience. But if you have someone, let's say that you're coming in and saying, I don't have any experience in a doggy daycare and how to run it, but I'm hiring these individuals to help me run it. And this is my why. So really kind of figuring out what those things are, I think is important so that they can be your cheerleader and explain to that underwriter why this loan is so important.
Okay, awesome. How long should a business be established before requesting a traditional bank loan?
Yeah, so whenever I get a request, the first two things that I ask for is the last 2 years of tax returns. So a traditional loan with any bank is going to ask for at least 2 years of history because it's going to show the bank kind of your background of what you've done to kind of grow the business. That's not always necessarily true in all situations. Like I was giving the example of you're buying a business or you're maybe buying into a new business with a franchise. So that, of course, would not be a traditional loan. We'll be looking at an SBA loan in those situations. So, but for traditional purposes, I would say 2 years tax returns is typically what you kind of want to have up front.
Okay, so if someone's starting a new business or like you said, maybe and entering into some kind of venture or franchise and they don't have experience or the last 2 years, then it would be more of an SBA loan and you're able to help them with those as well?
Yes, exactly.
Okay. So how long is the process of getting a business loan? Shortest versus longest?
Oh man, that's a loaded question there. It really depends. I mean, it's, think about it this way. So if you have a loan that's unsecured, let's say it's a small $5,000 line of credit, those can get worked pretty quickly because you have the one person that's kind of dictating how that loan is going from one decision to the next. Now, if you have a larger loan, let's say you have SBA involved, let's say you have some type of collateral where you have to get an appraisal, you have third parties that have to be involved during that process. So that can take the loan from 2 weeks up to 3 months. So really, it definitely depends on the type of loan we're looking at. So it just really just depends on the situation, the bank, the tools out there, if we're in a pandemic, it really just depends. But I would say 2 weeks to 3 months.
Okay. So what specific things does a bank look for when reviewing a loan when one is requested? And let me just ask a quick question. So whenever you meet somebody, in regards to the previous question, whenever you meet with someone initially, are you able to give them like a shorter window so they know
Yeah.
what they're expecting? Okay, so just depending on
So
the situation.
I guess that kind of is twofold question, I guess, because if I could give a quick, this is a loan we can do, or this is a loan we can't do kind of response of, that could be kind of decision in a few days. So we can kind of look at a relationship and say, okay, this is what we could do today. This is the how long this would take. So that first kind of conversation that you have with your banker is so vitally important in making sure you ask that question so that you can know what expectations are set up front. Because the biggest thing you want to do is have open communications with your banker and with yourself on what those expectations look like.
Okay. And then what specific things does a bank look for when reviewing a loan once you have determined that you can work with that client?
Yeah. So there's a ton of things we look at. It's a wide range of things when it comes to, how long someone's been in business, their background, all those things that we discussed before. But to really kind of just bring it down to just simplified what banks look for is what's called the four season lending. The first one is called the capacity. So what capacity can you pay back this loan? So a lot of times we could take that capacity from the last 2 years of tax returns and seeing what revenue is coming in, what existing debt is out there, and what capacity can you pay this loan back. So that's the first one. The second one is the character. When I would say character, that's past history of the borrower, the guarantor. So this would be your credit report.
Okay.
Credit reports are so important because it shows you it's almost like your report card, I always like to say, because it kind of shows you what you've done in your past, and it's a great predictor of what you're going to do in the future. So if you have anything late, anything that's past due, anything like that, that's something that you definitely want to really attack right off the bat before you even meet with a lender, because those are the things we're going to look at.
Okay.
But also collateral. So when I say collateral, that's kind of your secondary form of payment. So that could be, a real estate, a primary residence. That could be equipment. That could be, several different things. But if something were to happen with the loan, what resource would the bank have in that repayment if the business fails for whatever reason? And then last but not least is definitely capital. What capital do you have in place? What assets do you have? What savings do you have in place? What is your additional secondary resource if something happens? If you don't want to sell your business, you want to keep that business going, what other resources are out there for you to pay that loan? So those are kind of the four things I'd say we focus on, and that are kind of just the main things that the bank, looks at the most.
Okay, and then in regards to collateral, I know a lot of my clients sometimes ask if they can just show commercial collateral or their business collateral if they have, like you said, equipment or real estate that is owned by the business, so they can separate themselves from their personal. If someone's starting a new business, is that feasible, or do they usually need to?
It's really hard. So going back to like the traditional banking, for traditional banking, we wouldn't require, additional personal assets. But if you're starting a new business, that's when SBA gets involved. That's when the government gets involved. And anytime you have a government loan, personal assets are going to kind of come into that. So your primary residence is kind of the number one thing that a lot of times will be looked at. So with starting a business, it can be very difficult to separate from personal and business just because you're getting started. A lot of people also think that, over time that you can have a loan without personal guarantors. And that's something that's extremely difficult to get done with any banks, even if you've been in business for years. So that's another thing that a lot of people question a lot. So it's something to kind of remember is, it's you have to show on the personal side that you believe in the business so that the bank will also believe in your business as well.
Exactly. And that's why you really need to talk to your attorney too. You understand what the risks are when you're starting a new endeavor. So
Exactly. Yeah.
okay. So how can I pull my own credit history and also if I guess, how can I read my report? But then also, is there a business report or credit history that can also be found?
There is a business credit report out there, but it's not used by all financial institutions. So
Okay.
it's not as heavily weighed so much as a personal credit
Okay.
report. Personal credit reports can typically be pulled through what's called annualcreditreport.com, not freecreditreport.com. Annualcreditreport.com is backed by the government. So it's a free service that's provided to you as an individual. So you're able to pull that once a year, and that includes any one of the three credit bureaus: Experian, TransUnion, or Equifax.
Okay.
And you can actually pull that information and look at your credit report. The only thing that does not show is your FICO or Beacon score on those reports. A lot of times a FICO and Beacon score can differentiate between different entities depending on what you're applying for. If
Okay.
you're applying for, let's say, opening a deposit account, that's different Beacon score than applying for a loan at a bank. So Beacon scores can really range. And I know a lot of people get stuck on Beacon scores and ways to get approved, but over time, I've seen it being more important to really understand what your credit report has and what's on there.
Exactly. So just reviewing it once a year to make sure there's nothing erroneous in there that you need to take care of before
Yeah.
you need to
And
get a loan.
I think one thing too, a lot of people are starting to do is putting freezes on their credit report.
Hmm.
It's one good way to kind of prevent fraud. That's the biggest reason to pull your credit too, is to make sure every year that you don't have fraud in your credit report. Because the last thing you want to do is apply for a loan somewhere and you think everything's in order and ready to go, and your banker goes,
Yeah.
Paulina, what is this? Like, this, we can't do this. You have this credit, card that's been not paid for, 2 years. And you're like, what? Oh my God. So
Yeah.
it's important to have, that every year pulling that, or doing the credit freeze, which you can actually do through annualcreditreport.com or through the actual credit bureau agencies. And there's actually the ability to actually freeze them, and you can actually go into their app and unfreeze them whenever you're applying for anything. So
Oh, wow.
I push for a lot of people to do that, just because there's so much fraud going out there,
There is.
more than ever. So looking into that is really important.
Wow. Okay, great. That was something I didn't know. So that's awesome. What have you seen to be the biggest hit industries during this pandemic, and what would a bank consider to be a high-risk business at this time?
Yeah. So think of really kind of any industry that's been hit during the pandemic. I mean, restaurants, bars, hotels, commercial cleaning companies,
Oh,
dry cleaners, entertainment venues as well. A lot of those industries right now are considered just high risk because of where we are and where we're heading. It's kind of very, hopefully, good in 2021, but we're still very much in this gray area of not sure what's going to happen, in this year and in the following year. So those areas are definitely going to be difficult if you're looking to start a business in that area, to understanding in the next year or two to have, personal assets and investors in place, because it will be extremely difficult for a bank to approve that. Not to say it wouldn't, but
okay.
it's going to be another step up of things that you have to address.
It just has to be a really solid buyer or just business.
Exactly.
Okay.
Correct.
What are the top 3 reasons why a loan wouldn't get approved?
Man, there's many reasons why a loan won't get approved, but it's the biggest thing that I kind of see is poor planning
Okay.
and lack of understanding of what is needed from them, and how to kind of get into a place where we're a tool, not an investor. But like going back to the 4 C's, it's important to kind of just see if there's any of those areas that you're lagging.
Okay.
To be more specific, I would say kind of the top 3 things that I see would be that it's just too early to apply.
Okay.
You're starting a business and you don't quite have enough savings in place, or maybe you don't have enough experience in the industry for the bank to really use this as a tool for you to get a loan.
Uh-huh.
So it could just be time. and just time takes, for you to understand the industry.
Mhm.
And that's, maybe a year or two from the time that you apply, it might be something that, down the road would happen.
Uh-huh.
Capital restrictions, so lack of savings is a big one and a big component. A lot of times I see a lot of business owners liquidating their 401ks to start a business. And that's, that's part of starting a business, unfortunately, is risk. But with big risk is big reward for a business owner, So but, if you're going to the bank and you've, liquidated a lot of your savings, it can be very difficult for you to get that extra tool available from a
And
bank.
is there a certain, I guess this might depend on the business and the actual capital that's going to be needed to actually, launch the business.
Mhm.
But is there a formula or something where you say, you need to have 20% of the loan that we're giving you or something like that so people can know when they have enough savings before they go ahead and make the appointment to meet with you?
It's difficult to say because if there is, for whatever reason, a lack of one of these categories,
Mhm.
there needs to be something in place to show, okay, yeah, they lack in this category, but look at them here, here, and here.
Yeah.
They could definitely sustain this because of this reason. So if there is, for whatever reason, a lag in one of these categories, there needs to be some compensating factor in place that the bank can say, and that banker, that cheerleader I said earlier, can kind of fight and say, well, they might not have this year, but look at this, this, and this. This is why we should do a loan. This is why it's important for us to help this customer.
Okay, and that kind of goes back to, if you don't have experience yourself as a business owner, make sure you are ready to pay and find the right people that have experience to offset your lack of.
Exactly. You got it. You got it. Hit it right on the head.
Awesome.
And then, like I said, the secondary source of repayment if something goes wrong. So like the lack of collateral is a big one. A lot of times, like for an example, if we're talking about someone starting a business, if they don't have that collateral in place, like an equipment or, real estate to kind of support that secondary source, like that's a big one I see a lot
Mhm.
more than not.
Okay, and our last question actually. So, what would be the best advice you would give someone looking to borrow, whether they're just starting or they're just making some changes in their current business?
My biggest advice is to be prepared. Be prepared for your first meeting.
Mhm.
Understand that the person that's sitting behind that desk wants to help you and wants you to succeed. And you need to just go into the situation saying, how can I convince the bank to do this loan for me? Like, what are the things that are fantastic about this opportunity? What are the things that show this is a tool that I need to get to that next step? I think is so vitally important, and being organized and having all your ducks in a row and knowing what to expect, I think is great and important. Also, if you get a no from a bank, don't be frustrated by that. Like, see that as an opportunity to say, okay, we can't do this now. Amy, what can I do to kind of get to my next steps? Like, what am I lagging that I can, come back and see you in a year? And that's where the bank can really help you say, okay, this is what we're going to do, and come back and see me in a year after you've done this, this, and this, and let's talk. Because it's the stepping stone to get into that next level.
Yeah, and
And
I think that is very important because I mean, if people see, frankly, like our jobs, either of us is more of a partnership, right? And
yeah,
if we can help them get there, but they need to have, like you said, their information organized and ready and prepared.
yeah,
But a lot of times it's not just because I would discourage people from going from one bank to another to another to another because you're just going to keep getting knows if you
yeah,
are in the same situation, right? Because every bank has, or most banks have the same type of breakdown on, their risk and
absolutely,
how
absolutely.
on it. So,
You make a
just
great
be
point
proactive.
there too. I mean,
Mhm.
even doing that as well, going to different banks can actually hurt your credit too, because then you're seeing all these inquiries, and
Mhm.
inquiries can actually hurt your credit as well because they're hard hits on your credit report. So it's
Yeah.
actually hurting, and it's hurting them in a way as well by doing all those things too.
Exactly. So again, just partnering up with the right people and making sure that you stick to a plan, right? Look at
Yes.
it kind of long picture. So Amy, thank you so much for talking with us today. I'm really excited that we did this, and I know we're going to meet up sometime again to talk about the PPP loans
Yes.
and all of that. But I'm sure that the information that you've provided will help many business owners and just either start off their new business or maybe get a loan that they need to grow their business. So if you guys would like to speak with Amy, please email her at amy.hoke@fidelitybanknc.com or call her at 919-535-5621. And I'm going to put all that information in the comments as well. So if you guys need anything, please reach out to us. Thank you again so much, Amy, and have a great day.
Thank you. Thank you for the opportunity. I appreciate it so much.